Today we are starting chapter 3, which is journaling. So I love journaling. It's one of my favorite things to do in accounting, and hopefully you'll share my love for it. But basically, instead of putting something in a T account, you're going to put it in a journal. And you can still use a T account to help you organize your debits and your credits, but then you go from analyzing debits and credits and then you put it into this journal format and it helps you stay really organized. So the definition of a journal is a form for recording transactions in chronological order. So form for recording transactions in chronological order. Chronological means in order from like the very beginning to the end. So like if you're in the month of January, you'd go from January 1st all the way to January 31st. It has to stay in order of the date. Journalizing is when you record transactions in a journal. An entry is information recorded for each transaction. I'm just going to say info. Info recorded for each transaction. And then we have what's called double entry accounting. So whenever we've been doing our T accounts, you have to have a debit and a credit in order to stay in balance. Well, the same is true whenever you journal. You have to have a debit and a credit. So double entry accounting is recording debit and credit parts. Okay, I'm putting all of these notes together for for lesson 1, 2, and 3 out of this chapter because it all just kind of goes together. Let's go ahead and scroll down here to source documents. Source documents are business paper forms from which information is obtained. So business paper forms from which info is obtained. And we have another accounting concept, one of those GAAP principles. And the concept objective evidence is applied when a source document is prepared for each transaction. So every single transaction always has to have a source document that goes along with it. So this is applied when a source document is prepared for each transaction. Okay, here's some examples of source documents. So the first one is a check. Anytime you write a check, that's the same thing as cash because you're taking money out of your account. A check is a form ordering a bank to pay cash from a bank account. And we would notate it like check 1 would mean, or C1 would mean check 1. Okay, whenever you get to your checkbook, some of you may already have a checkbook, but you'll notice that there's numbers on it. Those numbers would be your check number, and you have to keep up with each single check that you write. Okay, moving on to invoice. That is a form describing the goods or services sold, quantity, and price. Then we have what's called a sales invoice. This is an invoice used to record a sale on account. Remember, a sale on account is whenever somebody buys something but they can't pay in cash. They're going to pay later on, so they're charging it. Okay, moving on to receipt. Y'all should know what a receipt is. Anytime you buy something from a store, you can get a receipt. It is a form giving written acknowledgement for cash received. So form giving written acknowledgement for cash received. Last two source documents are memorandum and calculator tape. So a memorandum is short for memo. This is a form which a brief message is written to describe a transaction. So a form on which a brief message is written to describe a transaction. Okay, and last one is a calculator tape. I use these a lot whenever I was a teller because people would bring in cash, or I would give them cash. And so a calculator tape is whenever you type in numbers on your calculator and it prints off a receipt of those numbers. And there's not really a vocabulary word for this, but we're just going to go ahead and write a little description. Calculator tape is used to record cash sales. Okay, now go ahead and get out your work together. All right, make sure that you turn to page 64 of your textbook. We are actually going to do work togethers for 3-1, 3-2, and 3-3, just because there's hardly any transactions in each of them. We could look at the examples in the textbook, but I think it's actually easier if we just go ahead and journalize instead of looking at the textbook. So make sure you're on the work together 3-1 on page 64. And it says, a journal is given in the working papers. Your instructor will guide you through the following example. Norma Dirks owns Dirks Copy Center, which uses the following accounts. So we've got cash, accounts receivable, some other assets, sales, expense, etc. Then skip down to where it says transactions, and we're looking at April 1st. We received cash from owner as an investment. So let's just think real quick about if we were just going to do a T account, what that would look like. So if I was receiving cash from owner as an investment, I know that I would write cash and capital, because remember, an investment affects your owner's equity. And we would debit cash because we'd be increasing cash for $2,800, and we would be crediting capital because my owner's equity would be increasing. So instead of writing this in a T account, we are going to journalize it. So we're looking at April 1st. So I need to write April 1st. And then our two effects that were affected are cash and capital. Well, because we have this entire cash column over here, we don't need to write cash down because we're going to record cash in this column. Something else that would help you is go ahead and write a plus sign over debit. This is whenever you receive cash. And then a minus sign over credit, and this is whenever you pay cash. And that'll help you remember what you debit, what you credit for cash. So since we have an entire column for cash, I'm not going to write cash out, but I do need to write Norma Dirks Capital. And we knew from the T account that we just drew that my cash would be increasing because we're receiving cash. So I would debit cash for $2,800. And whenever you journalize, you're going to do the cents. So make sure you do 00 for your cent. I like to draw a line under it, but you don't have to. So we debited cash, and we need to credit capital. So I'm going to credit capital for $2,800. And then we need to record the source document. Remember that accounting concept, whenever we have a transaction, we always have to have a source document that goes with it. So the source document would be R1. If you'll notice at the end of that transaction, there's an R1 next to it. So that means we must have used a receipt to record this. Alright, so we have one debit, one credit, so we are good to go. Let's move on to the next transaction. So on April 2nd, we paid cash for supplies. So once again, my cash is affected. And if you need to draw a T account for this, you could. We would be crediting cash because it's decreasing and debiting supplies since it's increasing. So let's go ahead and write down supplies. And it looks like we wrote a check because there's a C1 next to it. So I'm going to put C1 as my source document. And I always like to start off with cash just because it's the easiest to remember. If we paid cash, that means my cash decreased. So I would have to credit cash for $415. And then my supplies would be going up, and supplies are an asset, so I would debit supplies for $415. We've got one debit, one credit, so we're good to go. Alright, now let's skip to the next page. Go ahead and turn to page 69. And we're going to do this work together 3-2. So we're still with Norma Dirks Copy Center. And we've got 3 more transactions. So now we're skipping to April 5th. So I'm going to go ahead and write 5 for the date. You don't have to keep rewriting April again, okay? This time we bought supplies on account from Supply Mart for $600. So we do not have anything to do with cash. We bought supplies on account. So let's go ahead and write what we would do if we were going to do a T account for this. I know that I would have supplies. And then anytime we buy something on account, that means we have to pay somebody. So since I'm charging it, I would have an accounts payable dash Supply Mart. And you don't have to do a T account every time, but it does just help you know what's your debit, what's your credit. So if we bought supplies, that means supplies would be increasing. So I should debit supplies for $600. And then I'm charging it on account. So my liability would be increasing, which means that I would credit my accounts payable. Accounts payables always increase on the credit side. So let's go ahead and record this in the journal. Whenever you have two accounts and you don't have a column for them, so we don't have an accounts payable column and I don't have a supplies column, they're just going to go in general. And you always want to write the debit first. So I'm going to write supplies first since that's the account that was debited. And then accounts payable, I'm just going to abbreviate, dash Supply Mart under that. We don't need to reroute the date because this transaction goes together. And then my source document number is M1. So we must have used a memo. So I'm going to write M1 for the source document. Okay, so now let's record this debit and credit. So supplies was my debit, so I'm going to debit supplies for $600. And then I'm crediting accounts payable. So I'm going to go to the credit side on the general column and write $600. We've got one debit, one credit, so we're good to go. Moving on to the next transaction. On April 7th, we paid cash for insurance. So since we paid cash, I'm going to record that in my cash column. And we bought insurance, so I need to write down insurance as my account. And we paid with check number 2, so we need to write C2 as the document number. So if you need to start with cash, go ahead. We paid cash, so that means my cash should be decreasing. So I would need to credit cash for $500. Be very careful to not get off your lines, okay? Make sure that you continue all the way over to the cash credit column. It's easy to accidentally mess up and put your numbers in the wrong line. So if I credited cash, I need to debit insurance. So I'm going to debit my general column for $500. And we've got one debit, one credit, so we can move on to the next transaction. April 9th, we paid cash on account to Supply Mart. So cash is affected, so I don't need to write cash down, but we're paying off what we owe to Supply Mart. So I need to write accounts payable dash Supply Mart. And we paid with check number 3. Once again, if we're paying cash, we would need to credit cash. So we're going to credit cash for $300. And if I credited cash, then that means I need a debit. Also, if we're decreasing or we're paying off what we owe to Supplies Mart, we should be decreasing that liability. So we would debit it. So I would debit Supply Mart for $300. Okay, last time, go ahead and flip over to page 75. And we're going to finish out these last transactions. Okay, on page 75, make sure you're in the Work Together section. And we're going to April 12th. So on April 12th, we paid cash for rent. So I need to write rent expense. And we paid with check number 4. Okay, if I paid cash, that means my cash is decreasing. So I would need to credit cash for $650. And remember, expenses decrease capital, so any expense is always going to be a debit. If you can remember that now, it's going to help you later on. Expenses are always debits. So we need to debit our rent expense for $650. Moving on to the 13th, we received cash from sales. So if you'll notice, let me use a different color. We have a sales column. So because I have a sales column and a cash column, this is a weird example where you don't actually write any words. You're just going to write a check mark. So right here, I'm going to keep it in a different color so you can see it visually better. On the 13th, I'm just going to write a little check mark. Anytime that you receive cash from sales, you're going to do this check mark because you have 2 columns for it. So let's go ahead and record that. We use tape 13, so I need to write T13 in the document number. And it tells you that sales have to be credits, so that helps. Remember, sales always increases owner's equity, so that's why it's always a credit. So I would credit sales for $2,500. Ooh, it's so hard to write in these little spaces. And then if we received cash, my cash would be increasing, so I would debit cash for $2,500. If you need to make a note of that somewhere, that a check mark means received cash from sales, go ahead and do that. That way you'll remember when you do this on your application. Moving on to the 14th. Sold services on account to Case Ball, $480. So this time we did not get cash for the sale because we're selling it on account. So we need to write 14. And I don't need to write sales because remember we have our own sales column. Anytime you have a column for something, you don't need to write it down in the account title. We do need to write accounts receivable, Case Spa, because we're going to be receiving money from her in the future. She can't pay with cash, but she's going to charge it on account to us. And the source document number would be S1 for a sales invoice. Remember, sales invoices are for whenever you have a sale on account. Alright, sales are always credit, so I know I need to credit sales for $480. And we need to debit accounts receivable for $480. Accounts receivable are assets, so they are going to increase as debits. So I have a debit and a credit. Let's move on to the 19th. On the 19th, we paid cash for electric bill. Any bill we have is always an expense. You could also look back on the very first Work Together page and see that we have what's called a utilities expense. And we paid with check 5. So since we paid cash, I know cash is decreasing, so I'm going to credit cash for $220. And expenses are always what? Debits. So you have to debit your expense for $220. Okay, 2 more, and then we're done with the Work Together. And then you get to do this on your own. Fun, fun. April 20th, we received cash on account from K-Spa. So we are affecting accounts receivable dash K-Spa. So this K-Spa person is paying off what they owe. So they're giving us cash because they are paying off their charge. So my cash would be increasing by $255. And then we would credit accounts receivable because it's decreasing. This person is paying off their charge, so we need to take it off and subtract it from what they owe. Also, don't forget the source document like I did. This would be receipt 2. So that are at R2 here. All right, we made it to the last one. April 21st. Paid cash to owner as a withdrawal of equity. Anytime that you withdraw money from the capital for personal use, that is the drawing account. So we would write Norma Dirks drawing. And we did this with check number 6. If we were taking money out of the business, we would be decreasing the business's cash. So I would need to credit cash for $1,500. And then I'm debiting my owner's equity. So I would debit drawing for $1,500. Okay. So whenever you do this on your application, you're going to have the exact same problems. Your numbers are just going to be different. And then like your people, so like it's not going to be Norma Dirks, it's going to be somebody else. But everything you debited and credited should be the exact same. So make sure whenever you're doing this on your own, refer back to this Work Together so that you can make sure your debits and credits match with what we just did. Also be very careful to stay in line and make sure you always have a debit and a credit for each transaction. All right, hope y'all guys have a great day.